Good morning, everyone.
Good
And
morning.
welcome to the virtual marketing roundtable presentation as part of this year's Canada's Digital Farm Show. My name's Todd Austin. I'm the marketing manager with Grain Farmers of Ontario. And along with me today are Bailey Elsinger. She's the risk management consultant with StoneX. StoneX, formerly known as INTL FC Stone. We have Phil Shaw, the author of Marketing Trends. We have Scott Krakar, grain merchant with London Agricultural Commodities, LAC. And we have Dana Almond, the grain merchant with Hensall Co-op. So our format today will be a discussion of corn, soybeans, and wheat. And we welcome questions from the audience. Please use the Q&A function or the chat function at the bottom of your Zoom meeting to type in a question that you have at any time. We will endeavor to answer all the questions we can. If we run out of time, we will try to touch base with you, or you can contact us to get these questions answered. But definitely within the hour time frame, we will endeavor to answer every question that comes our way. So with that, I thought we could begin. I'm going to be the one running the slideshow. So as our presenters are presenting, they can just let me know and I will forward slides to them. Our first presenter for corn will be Bailey, and she will touch on the global and the US situation of the corn market. And with that, Bailey, if you'd like to start.
Well, thanks, Todd. Good to be, virtually with all of you this morning as I call in from my rural home in Northwest Ohio. So, yeah, kind of a fun world we live in today, and I'll use the word fun loosely, but good to be with you all this morning. And as Todd said, my name is Bailey Elsinger. I work for StoneX. No, I'm not used to saying that name just yet. And I've been with FC Stone for about 10 years. I grew up on a farm, so definitely an ag kid through and through. I married a farmer, so we row crop farm here in Northwest Ohio. So from the minute I get up in the morning till the minute I go to bed, I'm getting the question, what's the grain market going to do? One of these days I'm going to have the right answer, maybe. But we'll see if I can shed some light on what I see out there today and maybe how that could impact things going forward. So that's a little bit about me. I think the next slide is my ever so glorious compliance slide that I'm supposed to leave up here long enough for all of you to read it. I will just say, if you need really good material to fall asleep to, I highly recommend reading this, and it's good stuff. But I do have to leave it up there. So I'll leave it up there for just a few more seconds, and then we can move on to the next one. So as I start to talk about what has been going on in the corn market, I think we got to do a brief review of what the USDA report gave us just last week. So the corn, old crop, US corn and bean carryout. So for corn, it came out roughly where the trade was expecting it to be. Really didn't get anything there that was unexpected or unheard of. On the bean side of things, lowering that old crop bean carryout to 575 was, I wouldn't say a shock to the system, but on the lower end of what we really thought we were going to get. So I thought that was one thing the trade probably wasn't expecting, and more fodder for the bull's fire, I think. On the world side of things, though, still pretty comfortable. World corn carryout, only slightly lower than what the trade was expecting. Beans actually higher than the trade was expecting and higher than a month ago. And wheat also still quite comfortable. On the new crop side of things, they came out with a corn carryout slightly higher than the trade is expecting on the next slide. The bean carryout at 460 was, again, still comfortable. I still don't think that's demand rationing, but tighter than the trade was expecting and quite a bit tighter than what we were at a month ago. On the world front, though, once again, I think it's still comfortable, but that we did see those tighten and didn't just didn't get a real bearish reminder for the marketplace. Thus, we've continued to add to the gains in both the corn and bean markets. So as Todd mentioned, I'll go right into corn here. So on the new crop corn front, the USDA made quite a few changes to the balance sheet in September. They lowered that corn yield number to 178.5. That I think is, I'm going to say, believable. I think the market isn't arguing too much with that number. If they'd have come out with a higher yield number, Twitter would have burnt to the ground with everyone complaining how wrong that was. I don't think we've seen it bad enough to justify a reduction to 175. So I'm in favor of that 178.5. I think that's justifiable and achievable. On the demand side of things, they also made quite a few changes. They lowered the feed number 100 million bushels. They increased the corn export number 100 million and then reduced ethanol 100 million. All of those changes equated to us still looking at a 2.5 billion bushel corn carryout number and a 17% carryout to use. That's comfortable. Cal always told me that 8% carryout to use is about a month's worth of corn usage. So we're almost double that today. That's not demand rationing type scenarios. So if you start to look at the ethanol number actually being down 100 million from last month, and I think again that's justifiable. We did come back. We made a lot more of a V-shaped recovery in ethanol and gasoline demand post shutdowns for COVID. I think we came back a lot quicker and more robust than most thought we would, but we're still off numbers. And I have to wonder if we're ever going to get back to pre-COVID numbers, quite honestly. I mean, look, all of the people on this call are calling in from home today. Well, maybe not Scott. That looks like maybe a formal office. I'm not sure. But either way, we're not driving as much. How many people have just gone completely remote? And I don't know that ever goes back to normal, so to speak. So I think a reduction in that ethanol number is justified, and that's what the USDA gave us. On the export side, our corn exports look good. I can't sit here and deny that. If you look at our new crop corn sales, definitely ahead of the last 5 years. That's the chart that's kind of, that's up there first. It looks robust, especially versus the last 5 years. And the next picture shows why that is. We're the cheapest in the world. And so we should be getting the business. There's no doubt. The other piece of that is, the Chinese corn reserve auctions continue to be pretty impressive in China. The price of corn in China continues to skyrocket. They can actually buy corn out of the U.S. cheaper than they can buy it out of their own state reserves by dollars per bushel. So it doesn't really surprise me that they want to buy our corn, right? The question is, how long does that last? Does that last beyond South America getting started in corn harvest? There's a lot of talk about a crop problem in China with their typhoons and flooding. There's talk of changing hog rations in China to more corn and soybean meal based diets. So there was a lot of bullishness surrounding the corn demand piece and the corn export piece. Just this morning, China came out and said they were not increasing their trade quota on U.S. corn. There was a lot of rumor or scuttle that we could see that drastically increased. According to them this morning, they're not going to do that. So we saw the market take a little bit of premium out first thing this morning on that news. But so a lot of that tightening of the corn demand, the tightening of the corn carryout came from an increase in demand. And I don't want to say that it can't happen, but it's built on a bit of a house of cards that China's got to take corn. South America, I think, has to have a crop problem for us to really meet some of those expectations. So we'll see how that progresses. But you start to look at, what are some potential scenarios. So I put together a few potential scenarios here. And if you plug in those USDA demand numbers and then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 billion bushel corn carryout. And then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 billion bushel corn carryout. And then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 billion bushel corn carryout. And then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 billion bushel corn carryout. And then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 billion bushel corn carryout. And then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 billion bushel corn carryout. And then plug in our StoneX yield number that we came out with at the beginning of September, I think that we can get to a 2.5 closer to the 178, or excuse me, the 180 type number, you're back to a 2.6 billion bushel corn carryout. That's not demand rationing in my mind. The pro farmer yield number was 177.5, which obviously lowers the size of the crop. If you leave those USDA demand numbers as is, which mind you is a 7% year over year demand increase, that leaves us still with a 2.4. But what if the yield number is right, 178.5, and what if the export number is too robust and the ethanol number is still too big, and we can take some demand numbers out of there, more of a 6% year over year demand increase, we're back to 2.7. So just incredibly, I struggle to find a reason the corn market needs to run away to the higher side, because I don't think we need to ration demand at this point. I don't think we need to run back to $3 on the futures side, but I don't know that we've got a ration demand. And new crop corn prices, though, have made some pretty nice moves. If you see the D's corn market back, earlier September, we were had gotten back to the 50% retracement level on a corn chart. We were right up against the 200-day moving average, and we had failed a few times. And I thought, well, this is our chance. This is where we're going to stop out in corn. And sure enough, we broke through that. Now I think this chart is a couple of days old. So you've got the D's corn market closer to that 66% retracement level today, up around, the 373 area. So we've made a nice move in corn. I'm still in the camp that we probably ought to reward that type of a move in the corn market. One thing that's kind of telling for me is the fund position. Our estimate is putting the funds close to about 50,000 contracts long in corn. That's not earth-shattering news, but they were short 300,000 contracts earlier this summer. And we've covered that plus some in the fund position. The market's made its move. Doesn't mean they can't get longer. They certainly can. We've seen that in history. But for me, that takes some bullets out of their gun. That just takes some wind out of their sail. And they've already covered that short position. We've got to have another story. We've got to have a scare, a weather problem, something to push them to want to get longer. And I don't know where that comes from today. So I like to look at things in history. I don't have a crystal ball, but all I can do is look at history. And if I look at the last 5 years of December corn prices, this is a histogram of how many days we've spent at each price. So this red star is where we were at the beginning of August, guys. That's dismal. That's like me going home to a really mad husband every day. But sure enough, if you advance that, Todd, you can see where we sit today. And we're closer to it didn't move on me, but that star now falls more in where we've spent about 50% of our days. We're in that 380 type of number. We've only spent 20% of our time at prices higher than this. Doesn't mean we can't go there. Doesn't mean I want to have some left to sell maybe if we get there. But that tells me odds are in my favor that this is probably a decent price to sell some. So that's where I would start on the corn balance sheet and where we're at. So I don't know, Todd, if you were going to take it away there on some of your slides, but I think that covers just kind of a brief global and U.S. corn update from me.
All right, well, thank you, Bailey. Now we'll hear from Phil Shaw on his take on the Ontario situation for corn. Phil.
Thank you, Todd, and thank you, Bailey. I appreciate you giving us that background on the corn market. From my perspective, though, I know sometimes we think of the Americans as we, but it's a little bit different in Canada. With regard to how corn works, and sometimes I write market trends for the Grain Farmers of Ontario, and one thing that I have to remember is that Ontario is not just Chatham-Kent, where I'm from. It stretches from here to the Quebec border, where we grow corn, and we grow corn in Quebec, and corn trades all along that border, and the opportunities to import corn from the United States to change our price is different here in the deep Southwest versus what it is in Eastern Ontario, where they border on Northern New York and Vermont and places like that. So basis levels tend to go up as you go east. But this year, it's been a little bit different. Right now, in southwestern Ontario, we're on, well, all through Ontario, we're on import values. In other words, we're getting corn from anywhere we can get it. And usually that means the United States. The cash price for corn in Canadian dollars, Bailey right here this morning, is about $5.32. And so the optics with that, and I know you all think in US basis, and there's nothing wrong with that, but our Ontario producers are flat price sellers of grain, generally speaking, because the Canadian dollar is such a wild card with regard to our cash prices that to hedge futures values properly and foreign exchange values that are apropos is very difficult. So generally speaking, Ontario producers are flat price sellers. I don't know, Todd, if you could put that Ontario S&D slide up, or if you could go to that. But so think of Ontario as a very long place from Windsor to the Quebec border, where we grow so much corn. And of course, we're competing with our American friends, and who can always import corn into Ontario anytime the price gets to a point where it makes sense to. So the U.S. replacement price is typically a limit on the price of corn in Ontario. I really find this interesting. This is the Ontario corn supply and demand picture. And Todd has put together a 3-year average based on some previous years. This is something that I wish Ontario farmers could look at and think of because it's extremely important. This year in Ontario, we're looking, somebody can correct me about our acres, so maybe we're about 2.1 million acres of corn. That's typically what we grow. Sometimes we grow a little bit less than that. And some of the companies in Ontario are projecting yields of 180 bushels per acre for corn and maybe 58 bushels for soybeans. Those are huge yields that we're expecting this year in Ontario. And if we get there, and we are almost there, you can see this picture behind me, that's a picture of my field, we're going to have huge crops. And so what do we do with that? Well, if you look at Todd's Ontario corn supply and demand, you can see that exports, I shouldn't say exports, ethanol. You see ethanol at 3.007. That's million metric tons. Correct me if I'm wrong, Todd, because I work in bushels all the time. But about a third of our Ontario corn is taken up in our own ethanol sector. And if you could also look at the other domestic uses that Todd's got there: human food, animal feed, another 30-some%. So the rest of it, goes to food and residual, but we have to export our corn that we have left over. And that has a big bearing on price, whether you're in the Chatham area or whether you're in the far east of Ontario on the Quebec border. So as I said to Todd earlier, and the other guys can chime in anytime they want to, the more we can use utilize our corn here in Ontario, the better it is for us. Now, it used to mean when we were exporting corn, generally what that used to mean that we used to export corn to the United States. Maybe we still do from time to time. That's like exporting snow to Canada in January. But now exporting, when we talk about corn exports, it's more a thought of taking that into Europe, whether that's Ireland or other places, because we have a tariff advantage through the CETA agreement, which is the Canada-European Union Free Trade Arrangement. And so looking at this year in Ontario, and like I say, we're at guys that have old crop corn now, and I know there wouldn't be a lot of them, you're looking at maybe $5.50 or $5.40 for corn right now. New crop values on the board are about $4.72. So Bailey suggested that was a good time to sell based on her futures prices, and you can see that that's translating into about a $4.72 cash price for producers. Because Ontario farmers are flat price sellers, we like round numbers, right? Well, that round number is $5, right? And typically that will work out, but we aren't quite there right now on the board. But we do have a big crop coming through, And that will mean that there'll be pressure on basis probably at harvest time. And of course, that will vary depending on what we get into. But typically what we'll have is have a lot of corn, and that'll probably impact basis. But it all depends on other things too, U.S. basis values and things of that nature. But wherever you are in Ontario, whether it's down where I am in Chatham-Kent, or whether you're in Durham, Ontario, or whether you're north of Toronto, or whether you're in a place like Belleville, or whether you're in a place like Winchester in Eastern Ontario, the important thing is to have daily market intelligence. Okay, and what I mean by that is you can check the prices that Todd posts on our website, Grain Farmers Ontario. You can access prices daily, cash prices, because it gives you clues what's going on. Like, it's very frustrating to me at times because I don't know what's going on a lot of the time, because we don't know about corn being imported in Ontario, usually till it's already happened, or corn going to Quebec. And this year we even had Quebec corn coming into the far east of Ontario, reducing our price. So daily market intelligence is pretty key, because if you keep track of it on a daily basis, it helps you understand it a lot more and immerse yourselves in the market factors, and then you can capture some of those flat prices that we're talking about. Currency is a huge issue, not so much with corn as it is with soybeans in Ontario, but it's still an issue. And with the $75, $76, you know, that's a lot better for us than a 90-cent dollar or an 80-cent dollar. And in late March this year, we had a 68-cent dollar. And in retrospect, you know, you had a lot higher basis values, especially for new crop soybeans. So that's what's happening in Ontario. We're at about 532 now. That's going to change very quickly as soon as corn starts coming off here in the deep Southwest, because we're at about 472 on the board, and we'll have to see how that impacts things. But we'll have to export some of this, and it'll probably be to Europe. Hopefully it will be not to the United States. And of course, if we could get the domestic usage up, you know, just think if we could increase ethanol, just think if we could increase all those other things, and then we'd have higher Ontario corn prices for everybody that's producing it. And that's a good thing. So if anybody else wants to chime in, I'd welcome some type of discussion on some of the things I've said.
Well, what I'm interested in US and Canada as well, you know, we did see some livestock slaughter numbers fall at the early onset of this COVID-19. And just wondering how what's happening now, are the numbers increasing? Have herd size shrunk, or are we seeing a rebound in the, I guess, the animal husbandry industry?
I think it has rebounded. Bailey, I know maybe you could comment on some of the American livestock numbers. I know lean hogs has been going up lately. Could you comment on that a little bit?
Yeah, so I grew up on a hog farm. My parents own a small custom harvesting facility. So when this was all progressing, I was kind of on the front, I wouldn't say the front lines, but man, it was front of my mind concern for sure. And I think we were able to limit our shutdowns enough that we didn't cut back the herd too much. And I was one kind of starting to wave the red flag of, guys, like if we start, you know, like aborting hog litters and getting rid of sows and all those things, because we were afraid of the long term, if we were going to be able to market those hogs 3, 4, 5 months from now, like that was going to be our concern. So I was really worried that would have longer term ramifications for the livestock industry. And I think we were able to limit that because those plants were able to get back up and rolling. We definitely saw some very unfortunate things happen in the livestock industry in those 2 to 3 weeks that things were shut down. The hogs that were, you know, already 280 ready to go to market. Like we saw some unfortunate things happen, but I don't think it had the long lasting ramifications that I, for one, truly feared when it all started.
One of the dynamics I'm sorry, one of the dynamics in Ontario is if we have more livestock production, that would be a very good thing. And in the eastern parts of Ontario, we have a lot more livestock than we have down here where I am. And that helps our local corn basis to a large extent and creates a different marketing environment in that part of the province.
For sure. For sure.
For sure.
the sake of time here, we can continue this conversation a little bit later, but maybe we should switch gears into soybeans right now. And again, Bailey, if you can cover the global and the US story for us, please.
Sure. So on the new crop side for beans, the USDA also made some changes. They lowered that yield to 51.9. Again, I think that kept the naysayers at bay a little bit. I think if they hadn't reduced that, you'd see Twitter just in a meltdown mode that, that was too high or something like that. So I think 51.9 kept those folks at bay. I think that's very achievable. Looking at the bean crop, a lot of folks will tell you, well, we took the top end off in the month of August. And I would tend to agree. I think we were drier than we wanted to be in a lot of places. The problem is if our top end is now 80 and we took some off of that, that's still 65, 70 bushel beans. So I think we can still achieve a 52 bushel an acre bean yield personally. They did not make any further changes on the new crop demand side of things. They made quite a few on the old crop side, but looking at new crop, that production number was the big change. So pegging bean carryout at 460 million bushels. I think one thing that's important to note is, so this picture here depicts the changes from August to September. But if you actually were to compare this month's numbers versus what their old crop expectations are, they actually have exports 425 million bushels higher for the 2020 crop than they do for the 2019 crop. And in my opinion, I think that they're thinking that's all going to come from China. I think it has to. If that's what you think.
Much will depend on the what happens on November 3rd too, because as Canadians, we're all watching that unless there's some announcement from the White House that disturbs that relationship. Hopefully it will not happen.
Yeah, a lot of that's going to depend on how much China takes. If you look at a chart comparing all of our sales for all of last year, actually that's in a couple slides here, I'll get to that. But if you look at our new crop sales, definitely above the last 5 years, that's got the bulls excited, right? Look at our new crop bean sales. They're so good. And as they should be. Again, we were the cheapest beans by a wide margin for a long time. We should have been getting the business. Just in the last week or so, we're now only within $1 or $2 a ton from Brazil. So we had this huge competitive advantage that's kind of eroded here in the last week or two. But the chart that gets everybody, and it's I think a couple more slides, Todd, is the one that compares all of our 2019 sales to China versus where we're at just as of the 1st of September. And it makes this year's sales look phenomenal, right? Like, oh my gosh, we've already sold as much to China as we did all of last marketing year. Well, remember, the USDA's got the export number 475 million bushels bigger. That's all got to be China. So we've got to sell 475 million more bushels to China to start to dip into that 460 million bushel bean carryout. And then in my mind, have to sell them another 100 million before we tighten that bean carryout enough to make us in a demand rationing scenario. So I think so much is, yeah.
Just sorry to interrupt, but I just had a question here. Is this the export sales that we're seeing? Is this what's driving the futures market? Rather, since there is a big soybean crop, is it the exports that really seem to be driving the rally right now?
I think that's a large part of it. It seems to be. That's the story, right? That's the fun headline. It's not bearish. It's friendly. 29 of the last 33 trading sessions, we've seen a flash sale announcement on either corn or beans to China or unknown. By the way, unknown is like Clark Kent. China is Superman. They're the same. So I do think that's a driver for the bean market. I think there's a lot of other factors that we'll get into here in a minute when we start to talk about the chart and the funds here. But when you really look at beans, I think so much of the future and the excitement is dependent on that demand story. And again, we're basing our demand on what I call a house of cards. Like it's based on China. And And if our relationship stays good and phase 1 is really true and maybe there's a phase 2, like, hurrah, I'm married to a farmer, I'm voting for $13 futures and $15 in Ontario. That'd be great. But I just am a little crazy or a little skeptical, maybe a little bit of both. But I just don't know that that's in the plans for us today. Again, I think exports are good, and there's no doubt that sales to China are the first step. We got to have them sold before we can ship them. But it's a long time till those beans are on a boat and in China. And I think that depends a lot on the size of the South American crop. Their acres are going to be record acres. They had a currency play as well. Their real has devalued versus the dollar to record levels. Obviously putting theirs, as you guys well know, they're extremely strong basis in Brazil. So they were very willing seller of beans, both old crop and new crop. They have a record amount of beans sold for new crop. That's going to, leading everyone to believe we're going to have record bean acres. If we can get a little moisture in Brazil, they'll get a lot planted. But I think our export potential is going to come down to the size of the Brazilian crop. We have La Nina, so that's a concern in Brazil right now. But if they can have anything close to a normal crop, all of a sudden we're not as competitive in the world. Brazil's not the residual store of beans to the world. We are in the U.S. So again, not all that optimistic on bean prices, especially since we've already rallied $1.50. If you start to plug some different yield stories in, if you plug in our StoneX number at 52.9, and still use the USDA's astronomical increase in demand of a 12% year-over-year increase, you're back to a 540 million bushel bean carryout. If you plug in the Pro Farmer number at 52.5, you're still at 510. And if you use the USDA's 51.9, but maybe lower that export number back to 2 billion, which is still an increase year over year, don't get me wrong, but maybe it's not as robust, you're back to 585. So I just don't know if we really need the market to rally to ration demand. Oh, by the way, we've already rallied $1.50. And I've been saying this same story since June, guys. So trust me, I'm real good at being wrong, right? So I've been saying this for a while that we didn't need to rally, and here we are. So I'm never been more happy to be wrong, I suppose. But this is a $1.50 plus rally that I didn't think we were going to get, quite honestly. But I think ought to be sold. We've seen your Canadian dollar back off a little bit. Your basis is a little better. So I think that gives folks in Ontario a chance to sell some beans at levels I didn't think you were going to get a chance to. So I think that's positive. A big reason, a big driver in this has been the bean fund short covering. We were short in the bean funds earlier this summer along with corn. Not nearly as short in beans as we were in corn, but all of a sudden they're approaching 200,000 contracts long. Record long is about 260,000. Doesn't mean it stops there. Doesn't mean that they can't buy any more. Not saying that at all. But again, that takes some wind out of their sails. We've got to we're going to have to validate, in my opinion, the reason they're holding that long position. At some point, they're going to want to see some evidence. That's export shipments. That's more sales. That's something to validate the reason they're holding a long position. And my fear is, when they decide they don't want to be long anymore, who's there to buy it when they sell it? That's what I'm for the bean market. When it's over, and no, I don't think down a couple cents this morning is the day it's over. But when it is, I'm worried about the bean market.
Plus you got all that Brazilian production coming in too.
Yeah, and that's January, which isn't that far away. We should start seeing some new crop beans come off.
And they're talking about a record crop in Brazil coming down the pipe. And of course, in Canada, we hope to sell some soybeans too on the export market, like we did a few years ago to China, because the Chinese weren't dealing with the Americans. I don't know how it's going to go this fall.
Yeah, that would be nice if you guys could get some lake business.
I heard an interesting line that whether you love Trump or hate Trump, from a Canadian perspective, that phase one trade deal is the best thing that happened to Canadian soybean producers, because it is going to drive demand to everywhere else to the St. Lawrence, and we'll have markets open to us.
It's interesting. I heard one say that do Canadian farmers really benefit, or do Ontario basis traders benefit? You know what I mean?
I think you got a bit of both here.
Yeah.
Yeah, perfect.
So if you look at that same, yeah. If you look at that same histogram that I mentioned on corn, and you look at November beans and how many days we've spent at each price for the last 5 years, that red star is where we were at starting August. Again, not fun. I don't think the animation is in there, but you look at where the red star is today, and we're at that 10-10, 10-15 in that kind of direction towards the right side of the chart. We've only spent 8% of our days the last 5 years at a price higher than this. Does that mean we can't go there? Certainly not. Certainly we could. But odds are in my favor that if I sell at these prices, it's going to be one of the best prices in the last 5 years. And that's how I look at the bean market today. Not that we can't ever go any higher, but I'm looking at it as it's given me a gift. I better reward it.
Yeah, well, thank you very much, Bailey, for that insight. I think we'll switch into talking with Scott here and the Ontario story, please.
Yeah, thanks, Todd, and good morning, everyone. Yeah, I think just to echo those same sentiments, I think anytime we get to a stage where we're going to likely be producing record yields here in Ontario with a 2-year high bean prices, a 2-year high on the futures market, it doesn't seem like a bad. So I think it seems to be a wise recommendation and something that we do need to consider given those outlooks. That being said, I think the story continues to be China, and there is questions as to whether their demand will continue. But I mean, China's the story, right? So as far as we see on the slides here, I think it's no secret that Ontario is the largest producer of soybeans in Canada. Geographically speaking, Ontario's traditionally been the only place where soybean can really be grown effectively. With newer varieties, we've been seeing a growing trend in Western Canada. But however, given their short growing season, at times we see some poor quality, low protein beans out of that region. So, Ontario still continues to be the best growing condition for Canadian soybeans, and will remain the dominant player in Ontario. Let's switch to the next slide there, maybe, Todd. Yeah, so just to talk briefly, not to go through all the numbers, but just to talk briefly about the situation here in Ontario. This year we've got most likely similar to the U.S. numbers, record high production, record high yields. Estimates are all over the map to the upside. We consider 53 bushel average to be about right here in Ontario in our shop today. That's versus, I believe, a trend line yield of about 44, just showing the extremely large crop. There are a lot of stories about some really extremely high yielding fields, which will be a reality. There will be some areas where we do see deficit production, even lower than trend line yields. From the conversation and chatter we hear from some growers, most notably Haldimand County, they had very limited rainfall through August. And as we all know,
Looks like we lost the audio there.
Yeah, we lost the audio there. Sorry, Scott. Maybe in that, we'll just kind of move on here. We can come back to soybeans. One question I did have for the panel, I know for Ontario, we have crush production and we also have IP soybeans. And just wondering what are your thoughts on IP soybeans and premiums and opportunities for producers? I know it's a little after the fact because most producers have already signed contracts, but going forward, this is a very important market for Ontario producers, and I just wanted to hear what your thoughts on that are.
Well, I can say generically, yes, that there is significant opportunities, and I think Ontario has a real comparative advantage in the non-GMO market. There's several different IP programs that are out there for food grade non-GMO beans, and there's also a variety of dried bean programs if you're in the right growing spot. So there's numerous options for the Ontario grower and opportunities.
Yeah, because when I used to trade beans years ago, we always looked up, where can a farmer make profit? One is, reducing inputs. Roundup Ready system, you've got a 1 or 2 pass with one chemical, or an IP system where you're adding value to the end product. We're not going to debate the benefits or negatives of each one, but there are opportunities for producers on either side of the GM and non-GM fence. And the nice thing is Ontario's in a real good position to take advantage of both of those production opportunities.
Is it 30% the non-GMO, or is it 40% in Ontario, Todd or Dana? Or?
I always use about 30%.
30% production,
it
okay.
could fluctuate around that for sure.
Yep, that rings true.
I know that that's what I grow, but in the deep Southwest, we're finding that whether you grow a biotech variety or non-GMO, you have to spray them the same because we have so many weed resistant issues. But I would think that the future is pretty bright for the IP soybeans for the coming year. Also too, with regard to the Ontario soybean situation, when we think about Ontario producers being flat price sellers, we had Ontario basis levels for new crop at about 3.25 back in March and April when the dollar was at 68 cents US. And that's an example of having daily market intelligence and being able to hedge that part of the FX, even though we are flat price sellers in Ontario. It certainly is it's about 80 cents higher now than the local basis for soybeans. So that was quite a marketing opportunity. And I know you can't look back on those things. It's just an example of some things we have to look in Ontario with regard to how the value of the Canadian dollar affects our pricing. And of course, it also affects the availability or the demand for IP beans going out of here.
That's
yeah,
true.
round numbers. Sorry, Todd.
No, go ahead, Dana, please. I
was just going to say in round numbers, every penny move in the Canadian dollar is 20 cents to the bean basis.
That's right, yeah.
So it couldn't be more important to pick a range, decide what you think. Are we going to see a range of 70 cents to 78 or something like that? And when you're at that low end of the range, nobody's going to predict it perfectly, but at least have an idea of what is a low dollar and what is a high dollar. Yeah. When you're at that low end of the range, start sniffing around for basis levels. Chip in.
Yeah, I know we were going to talk about wheat, but like when it crashed down to 68 cents, on COVID concerns, suddenly wheat was way over $7, for a lot of us producing wheat this year. So it's a big deal. And that little rule of thumb, Dana, that you just gave 20 cents to a soybean basis for a penny movement in the Canadian dollar, kind of write that one down.
And it just goes back that, as producers, we do have to keep up to date on all the marketing activities. We do have to keep track of where the Canadian dollar is. We do have to keep track of where the futures are and where your local basis is, and make informed decisions using the best tools that we can find. Knowing, you could spend 24 hours a day reading information. It's just you have to, make sure you're looking at the information that best works for you. Going forward, I think we'll go into wheat. Oh, I'm sorry, I went ahead of myself. And again, Bailey, if you could give us an update on the global and U.S. story for us.
Yeah, I don't have just oodles and oodles to say. The USDA came out with really not much change from August to September. Obviously, carry out a little smaller than we had in 1920 at 925 million bushels. That's still a 44% carry out to use on all wheat here in the U.S. To me, that's pretty comfortable. To me, I don't feel like the U.S. is in a demand rationing state either for wheat, but wheat is such a world commodity. So if you look at the next slide that has the U.S. wheat carry out to use, it is the tightest we've seen in 5 years. So it's still not tight, and when you look at the last 20 years of data, but it's tighter than we've seen. So I think that's helped the wheat market off its lows. But the moral of the story is when you look at the next slide of world wheat carry out to use, it's record high. So I think U.S. and Canadian wheat values really comes down to whether or not the world needs our wheat. If they need our wheat, they'll pay whatever they need to pay to buy it.
Is there any different fundamentals for soft red winter wheat, Bailey? Because that's what we grow most in Ontario. What I've found is that over the years there is a story within the wheat story, and typically we look at the soft red winter wheat story here.
Yeah, I think you're 100% right. I think you've got to separate those classes out. I think there's some potential for some longer term soft red demand as we see a lot of what we would call grocery boats getting exported, where, Indo and different places are always going to take a little soft red, makes their bread, makes their cookies, makes their crackers, those kinds of things. So I think long term, there is a little more steady demand for soft red wheat, which is optimistic. I do think wheat acres in the state of Ohio, probably Michigan, will be up this year. If you look at profit per acre for, we run it for a sample Ohio farm, wheat's quite competitive when you compare it to corn and beans.
Yeah,
even if you don't sell the straw, it's pretty competitive.
Yeah, I heard something the other day. They're calling wheat the new corn.
I
know it's a stretch.
I know
it's a stretch.
I do think it's caught some guys' attention about putting some more wheat in this fall. The problem right where I live is that, last year we didn't plant an acre of soybeans.
Yeah.
Our farm did, but there's a lot of guys that didn't. So last fall they put a lot of wheat in on those prevent plant acres. So I don't know right in my trade territory if wheat acres will be up significantly, because they were kind of already up this past year. So we may keep those wheat acres where we would have maybe lost them typically. We may keep those wheat acres in production another year with the profitability that the market's showing us today. So, but if you look at that 5-year histogram chart, again, I keep probably being a broken record here, but if you look at a 5-year chart of where July wheat has spent most of its time, we're in a level where we've only spent about 7% of our time higher than these prices. July 21 wheat today at $5.55 puts us right at that yellow line, where we've only spent 7% of our time the last 5 years at a price higher than this. Does it mean it can't go higher? Sure, it sure could. But probability tells me that if I sell some at these levels, I'm selling some at a price we haven't spent much time better than. So that's my really insightful view on wheat. I'm sure Dana has much more in-depth coverage that he can chat on here.
We want all the secrets, Dana.
I don't know. Thanks, Bailey and Todd. I don't know about that, Bailey, but it does interest me. There is the story, and Phil, that was well put. There's a story within a story for wheat and soft red winter. It's actually relative. The Great Lakes, our region around the Great Lakes, it's actually relatively tight for wheat, despite a normalized crop in Ontario this year. And the best example of that is Toledo warehouse stocks at maybe Bailey, are multi-year lows. So you've got a situation where the futures have done a good job. They're at relatively high levels, but it's also with wheat being the new corn, there's no carry in this thing anymore. There's I'm just looking at there's about 14-cent price spread between December futures and May. So the market is actually saying, we want your wheat.
Yeah.
We don't want you to store your wheat.
Yeah.
That's the situation we haven't seen for quite some time. Like
how many acres do you expect in Ontario this year, Todd? Or Dana, I'm sorry. How many acres do you expect for Ontario wheat this fall?
You know, unlike Bailey hinted at how American farmers will tweak their acres based on price, I don't find that as much in Ontario.
Okay.
I think it's really the primary driver of Ontario wheat acres. And actually, Todd, you've got the chart of the multi-year Ontario supply and demand. Does it have acres on there? It doesn't have
it just has production.
Yeah, but I've always visualized that if the weather is good, like this year, soybeans are coming off in a timely manner, and you get the wheat pounded in good order, we're going to see 1 million wheat acres.
Yeah, I agree with you, Dana. I think it's the Mother Nature really drives the acreage at this point. Yes.
And that's a great segue. I was just to touch on the Ontario market. I was just going to contrast the previous crop year, 1920. We had, I would call it a multi-decade, if not record amount of acres ripped up in Ontario due to poor conditions. So we only had 550,000 acres harvested the previous year in 1920 for harvest 19. So 1.2 million tons of production. This chart does a good job of showing, like a typical production of Ontario winter wheat is in that 1.9 million, 2 million ton range. So we only had 1.2 million tons production in the previous crop year. And I visualize that's basically what we need here domestically in Ontario. So in the previous crop year, we had basis levels go up through the roof. At one point, they were 60 US cents inverted higher than the existing crop year. Just basically putting a price on that wheat such that it would never leave the province. And the market did a good job of that. And but then we had fielded lots of questions. Okay, well, this year for this harvest 20, we had 980,000 acres is what we're calling it, winter wheat acres. And so a 2.2 million ton production. People said, well, that's crazy to go from 1.2 to 2.2. How in the world are you ever going to deal with this crazy crop? And it's not, and my point always is that's not a crazy crop. That's just a normal crop. Yes. So we've got in Ontario where we're sitting today, we've got a quote unquote normal supply of wheat. But unlike the previous crop year, basis levels are still historically strong, especially given the crop size, but they are priced to move anywhere in the world. I made that comment earlier about Trump being the best friend of the Canadian farmer, even though we're cut off from his trade deal. But that impacts wheat through the back door as well, because at the U.S. Gulf, they are, guess what? They've got their bean and looking forward to putting their corn hats on, and just about the last thing they want to do is handle wheat. And so they've basically put a price on U.S. wheat coming out of the Gulf, basically the price saying we don't want to sell it. And so I'd like to think that's going to drive some of these inelastic soft red winter buyers to the St. Lawrence. We've seen a great deal of that already. So
that'd be good. That'd be good.
Yeah. I think those doors are closed as we speak. Like even here in Ontario, of course, we're going into getting ready for bean mode, and that export window is closed. But we did an effective job as a trade getting wheat out the door at harvest. I was going to say, with this year's crop, 980,000 tons, 89% of it was soft red winter. So we remain overwhelmingly a soft red winter producing province. 8% was hard red winter, 3% soft white. That soft white number keeps seeming to slide
hard to believe,
lower and lower. Yeah.
Yeah. hard to believe at one time we were pretty much 100% soft
100%.
white.
We've come a long way.
Maybe
Yeah,
we're showing
I
that
don't miss
maybe-
those days, frankly, though, because you never
No.
knew what the soft white was going to be there. So,
No, that's true. That's true. It is a better, it's nice having the choice of a number of different classes of wheat that
yeah,
all perform relatively well in the climate that we have. As Dana said, you know, going from 500,000 acres to almost 1 million acres in 2 crop seasons, it can make, you know, the job of marketing the grain difficult when you cannot necessarily tell your overseas buyers or guarantee any kind of production levels until you know what's been planted, and then also knowing how it overwinters and how it breaks dormancy as well. So it's an interesting crop that I think Bailey and Cal have mentioned a number of times. It can be killed 3 or 4 times in a year and still surprise you in the springtime. And then sometimes it surprises you in a negative way, like we saw the 2019 crop year where we did lose a lot of acres. So, you know, it's an interesting crop. They're all interesting crops. And, you know, I guess the takeaway is we need to watch our futures markets and our Canadian dollar and, you know our cost of production so we can make an educated insight onto whether we need to price grain at a certain point in time if it's giving us the signals that, you know, looking that it's at near high levels over a 5-year average that Bailey showed us. And, you know, maybe not pricing everything at once, but pricing a little bit here and there and just making sure that if you can, you price above your cost of production for a profit. Sometimes you have to price because you need cash flow, but you need to be mindful of what your rationale is for making your crop sales. And I think we're right at our 11 o'clock time. My clock may be a little fast, but I want to thank the panel. You folks have done a fantastic job. I appreciate the work that you've done on this. Thank you very much. And I want to thank all the participants that have been watching. Thank you. I know I didn't see any questions on the screen. That's fine. You can always talk to any one of us individually. We have, I guess, what you would call a virtual booth at this electronic farm show. So you can always come over there and ask questions. If I'm not at the booth, the people at GFO can forward the questions to me or forward them on to people that can answer that. And I thank you for your time today. And more importantly, have a safe and profitable harvest. Thank you very much.